So guys, let's get started. Today we'll closely examine the market dynamics from a detailed wave analysis perspective. Monday was quite calm for us, with the market showing no significant volatility or drastic changes, and today is Tuesday, and the market is gradually beginning to show some movement and activity. Let's start with the currency market. The very first financial instrument will be the Australian dollar. The Australian dollar on a 4-hour time frame. Yesterday, I created a detailed post on Instagram and Telegram discussing a downward wave that is forming within the fifth wave. Here we have a prevailing downtrend, meaning the market consists of the first and second waves, which is considered the start of the trend. The first wave must always consist of a total of 5 distinct sub-waves for accurate identification, and following that we find the second wave occurring within the sideways movement, which is labeled as the 2. It's not necessary to trade all the various waves in the market. Most wave traders typically focus on the third and fifth waves. In contrast, the first wave is often of little interest to them because it tends to be very challenging to identify, largely due to the absence of sufficient historical data for analysis. Once the initial first and second waves form, you can then begin to work on the third, fourth, and fifth. We applied the same approach to the traders. We conducted sales during the third wave, and now the market is taking shape, forming a pattern of 3 before progressing to 4A, followed by BCDE for the anticipated fourth wave. Based on current trends and analysis, I am expecting a notable decline in the fifth wave that follows. What is the advantage of trading the third wave, guys? Understanding why we prefer to trade during the third wave is crucial. When you enter a trade at this point, you can set specific targets based on established rules. However, it's important to note that the third wave may not always reach these expected targets, which adds a layer of uncertainty. If the anticipated third wave fails to reach its specified target, we will patiently await the emergence of the fourth wave, after which we will focus our efforts on the fifth wave to successfully achieve our overall targets with that wave. It's crucial to effectively trade and thoroughly understand the specific strategies and precise locations where you will exit the market. This comprehensive approach significantly aids us in effectively performing wave analysis. Regarding the Australian dollar, guys, I think there will be a decline. Everything is going according to the trading plan. Within the framework of the fifth wave, the fifth will be below the third wave. The triangle looks very nice, just like in the book. Open the book and see there are triangles. Triangles are corrections in most cases, and then the trend continues. Waiting for the decline to continue after making $2,400 in profit. We've already moved the stop loss with the traders to here for the fourth wave, and basically my stop will be equal to $1,700. If the fifth wave continues now, we will earn $5,700 on the fifth, which will be a much larger profit. I always try to maximize profit in the market, giving it the maximum amount of time to grow, and I try to minimize losses. This is very important. If you don't minimize losses, you won't be able to cover your losses with profits later, so you need to do everything in this exact sequence. The Aussie is beginning to strengthen. In the morning, I had 2,200 in profit, now it's 2,500. I think the fifth wave will come very soon. Let's move on. Next instrument, USD. Colleagues, regarding the USD currency pair, please remember our discussed daily trading scenario. Here the first impulse wave is forming, followed by correction A, correction B, and correction C. A regular type of correction occurs when B exceeds the maximum of the first wave, a false breakout, returning back below the maximum of the first wave, which are the first signs of a regular correction. After this point, we experienced a downward movement within the established structure, 1, 2, 3, 4, 5 phases. It was likely a correction. Next, I'm waiting for another drop like this one, 1, 2, 3, 4, 5. As long as the price continues to move within this well-defined descending channel, we should aim to sell whenever it reaches the channel's boundaries. That's basically what we're doing. Allow me to present to you the 4-hour time frame now so you can better grasp the logic of what is currently unfolding. On the 4-hour time frame chart, we observe the initial first, second, third, and fourth waves developing within a triangular formation. This indicates that triangles typically represent corrective waves in market movements, which are often followed by a breakout. Subsequently, the market is positioned to make the concluding fifth wave, completing the overall wave pattern. This analysis is essentially the same as what I previously illustrated on the daily time frame, which consists of 5 distinct waves, but now we are examining it in a more detailed and nuanced manner. When you switch to lower time frames, you can closely analyze each individual wave and uncover several smaller 5-wave structures, as the market frequently exhibits movement in 5 waves. This provides a deeper understanding of the underlying market dynamics and patterns occurring within each wave movement. Then, after the 5th wave has completed, we observe a correction ABC that moves in the opposite direction. I believe that this downward movement we are observing is a significant impulse, while the upward movement we experienced last week serves as a correction. We can categorize this sequence as the first wave, characterized as an impulse that consists of 5 distinct waves. In addition, what we are currently experiencing can be labeled as the second wave, which is composed of an ABC structure. Now, the euro has begun to experience a slow but noticeable decline, and we have settled below the critical support level. Ideally, we should be anticipating the next wave, which is labeled as number 3, and this wave will also consist of 5 distinct smaller waves, meaning 1, 2, 3, 4, 5. Typically, we should aim to reach the Fibonacci retracement level of 161.8. Therefore, I am actively looking to sell the euro during this week, as I believe the market conditions are favorable for this strategy. Last week, guys, remember I had open buy positions because I was working on this wave C correction, trying to take profit, but unfortunately the market sharply reversed, and I realized that the completion of C happened here, and we immediately started selling. It's also extremely important to thoroughly understand and consistently update the wave analysis on a daily basis to accurately see how the market has changed over the previous day, because those who watched me since last week might still be in buy positions. I have already begun selling my assets because I perceive this moment as the catalyst for this current market correction, and I believe a new upward impulse could initiate now, leading to a standard correction on the daily time frame. I would like to reiterate once again that it is generally best to trade in the direction of the higher time frame, as this approach provides more accurate and reliable entry points for trades. For instance, if we observe a regular correction on the euro that has not yet completed and there is likely to be further decline, it is reasonable to conclude that this movement consists of 5 waves down, followed by an ABC correction, and then again 5 waves down. This analysis can help traders make more informed decisions based on broader market trends. Summary. This pertains to the daily time frame. The higher time frame will consistently indicate the overall market trend, and you should trade in the direction of that prevailing trend when analyzing the lower time frame. Avoid getting distracted by temporary corrections, as I unfortunately did with the euro, where I sought to catch that C correction, which ultimately resulted in a loss of $100. However, in any case, I did make an effort to work with and understand that correction during my trading strategy. It's possible that it could have been profound, or perhaps it was just a reversal. So sometimes, if you're an experienced trader with considerable skill, you can attempt to catch market corrections. Let's move on, guys. The next instrument is dollar-yen. Regarding the dollar-yen currency pair, esteemed colleagues, we currently find ourselves in a very intriguing market environment, and I would like to demonstrate how the market is moving on the daily time frame for better understanding. Here we have the initial impulse wave, which is then followed by the subsequent correction. After the second wave concludes, we enter the third impulse wave, followed by the fourth correction wave, which occurs within a defined triangle formation. Following that, we then observe the fifth impulse wave, which surpasses the height of the preceding third wave. If we carefully break down these larger waves into smaller subwaves, specifically analyzing this sequence of 5 waves, we can clearly identify a first wave, a second wave, a third wave, and a fourth wave within the structure. Now the question we need to consider is which specific wave is missing here. We can clearly define the anticipated next movement of both the dollar and the yen for the upcoming 2 to 3 weeks based on current market trends and analysis. We are currently still missing the crucial fifth wave needed to complete this entire fifth wave successfully. Therefore, it is very important to closely monitor the subwaves, as they will clearly indicate whether the larger impulse wave has fully completed its movement or not. Currently, I am patiently waiting for the fifth wave to update the third wave, and I hold a buy position on the dollar-yen currency pair. Now let's look at an even lower time frame, the 4-hour time frame. On the 4-hour time frame chart, we can observe the initial first wave forming, followed by the development of the second wave, and then the progression into the third wave. The third wave reached 161.8, indicating a strong trend. Then comes the fourth wave, known as the ABC correction, and it appears we have already experienced a breakout of the channel. I start buying the dollar-yen on the breakout of the channel. Yesterday, I started buying on the breakout, and I will try to catch this movement within the fifth wave, meaning the fifth wave. The market is also moving in a wave-like manner. The third wave at 161.8 indicates a strong trend. What do we have for the fourth wave here? It tested the maximum level of the first wave, bouncing off that point, and this effectively acted as a support level for further movements. It's common for the maximum or minimum of the first wave to act as support, a level. That's it. Then there's a bounce, a movement upwards, and we are moving within the fifth wave. So, colleagues, congratulations to everyone in the closed channel. We all started buying yesterday. I strongly believe that the fifth wave of economic growth should happen very soon. Alright, let's move on, guys. Next, let's take a closer look at the various cryptocurrencies available today. About digital currency. I'm currently trading two cryptocurrencies, Bitcoin, the first instrument, and Ethereum. Concerning Bitcoin, observe closely. The initial pattern is forming, followed by the second, then the third, accompanied by an ABC pattern, and finally an effort to rise in an ABC formation. This is a complex type of correction, which could be either a flat regular correction, or it may also be viewed as a standard type of correction by some individuals in the field. A five-wave move is expected to follow due to the presence of an impulse. Typically, such upward and downward movements are primarily corrections, suggesting that Bitcoin may still have the potential to continue rising in value. For the time being, I'm not anticipating any decline in the value of Bitcoin. I'm trying to work on a five-wave upward, looking for buys. On the 4-hour time frame, one can analyze the market as follows. The sequence labeled 1L345 represents the impulse phase, followed by the ABC pattern, which signifies the second wave correction. After completing this correction, a breakout is anticipated, leading to a renewed attempt to buy Bitcoin. It is advisable to set a stop loss at this specific level. The first target for profit-taking will be established at this point, while the second target for Bitcoin is projected further along. Currently, I observe that Bitcoin has experienced a decline. This may indicate that we are witnessing a corrective phase. Correction. To what specifically? A correction to this five-wave movement pattern. Each movement comprises 5 distinct waves. 1, 2, 3, 4, and 5. This will be the very first special wave event. This is likely the second sum wave, after which there will be subsequent waves numbered 3, 4, and 5. So, roughly speaking, this is my trading plan for Bitcoin. If its price goes below 1 in the double digits, that will indicate a reversal and signal the beginning of a downward trend. For the time being, my trading plan is to maintain my buy positions, and there is nothing further to add at this moment. As for Ethereum, guys, I also mentioned Ethereum on my Instagram. It has its own distinct wave model, and well, all cryptocurrencies exhibit similar patterns. I don't see the point in trading many different cryptocurrencies because they all tend to move in one general direction. That is to say, there is a sequence of movements. 1, 2, 3, 4, 5, which represents the first wave, then followed by ABC, which is the second wave. The second wave has notably bounced off the 382 Fibonacci level, and guys, this indicates a strong probability of a price reversal, just like with Bitcoin. Yes, in Bitcoin we also have 1, 2, 3, 4, 5, which corresponds to the second wave. So for me, this again represents the first wave, and this movement is actually a corrective phase known as number 2. I expect to see a third wave next, followed by a fourth, and then a fifth. The third wave may conclude somewhere within this overall structure, or there could be a potential extension. Therefore, I also hold buys for Ethereum. If you enable the hourly time frame in your analysis, you can clearly observe here that you have identified the first, second, third, fourth, and fifth waves. The ABCC method consistently captures the stops of the fourth wave, which resembles this liquidity pattern. After this crucial phase, we proceed with the next wave in the sequence, enhancing our understanding of market movements. So for now, guys, no panic. For those buying Ethereum or Bitcoin, I think this is a correction. I believe this correction on the hourly time frame also resembles a 5-wave model. The BC correction will be 1 to 2, then 3 to 4 to 5, all within an uptrend. So for now, I also don't have significant profits in cryptocurrency. I'm currently engaged in the process of purchasing, with the stop-loss order placed just behind the second wave, ensuring full compliance with risk management protocols and strategies. My risk per trade is $1,000 at 1%, and my profit here is $4,700, meaning a trade on the third wave gives me a 1% risk and a 47% profit. You should also aim to trade with a risk-to-reward ratio of 1 to 4 or 1 to 5, and achieving just 20-30% profitable trades will be sufficient to steadily grow your overall capital over time. If the situation is reversed for you, then you may be doing something incorrectly. Alright, let's move on, guys. Next instrument, stocks. Let's take a closer look at Tesla's stock performance. Last week, I also shared with you a recommendation on both Instagram and Telegram, highlighting that an intriguing wave model is currently forming for Tesla stocks. All wave analysis enthusiasts will truly appreciate this insightful information, as here you can clearly see the distinct first and second waves within the ABCDE triangle formation. Triangles frequently emerge in various structures like ABCDE, which are then succeeded by the subsequent impulse. Then comes the anticipated fourth wave. We have a brief correction planned for the shallow fourth wave, designed to prevent us from diving too deep into it, allowing us to buy into the wave and subsequently focus on developing the upcoming fifth wave effectively. It's a straightforward, shallow three-wave correction in the pattern. The third wave reached the 161.8 level, indicating a strong trend and a shallow correction. It's often the case that if the third wave reaches 161.8, the fourth wave won't go beyond 1, resulting in a weak correction, and then the fifth wave may start. So Tesla, guys. Someone told me on Friday during the broadcast that something would open lower for Tesla, and there was some panic among traders, although I see we opened a bit lower on Friday, but the growth will continue. So trade according to your trading plan, set your stops. If you're working on the fifth wave, just place a stop below the fourth wave, but if it hits the stop, okay, we'll re-enter later and wait for a deeper correction. If the market continues to rise, then why feel the need to panic? Simply hold your position. My risk on this trade is $800, and the profit will be around $600. Take profit not set at $600 yet. I think I'll take a position of 1 to 7, 1 to 8, which is about $600 for Tesla, so $600 to secure. Tesla is currently trading at 440. If its stock price rises to $600, Tesla shares will experience an increase of nearly 30 to 40%. To illustrate, if 40 represents a 10% rise, we can calculate that this brings us to $540, which equates to an approximate 30% increase. This scenario indicates the potential occurrence of the fifth wave of growth, leading many people to state that Tesla shares have indeed risen by 30%. Then, after that, there will be an ABC correction, where C removes wave 4, so this will also be a short process, as we will rise by exactly 30%, then we will go to remove this fourth wave, because when the ABC correction occurs, wave C removes the fourth wave. So Tesla, guys, let's work according to the trend for the fifth wave up. Gas, guys, about gas. Colleagues, congratulations to everyone. On Monday I gave you this trading recommendation that you can buy gas. I made an impressive profit of $7,000 in the market in just 2 days. Starting from Monday, the market gapped open and shot up significantly, and here it is, folks. My target has been reached. I am planning to lock in my profits very soon. I think I'll wait until this evening to close out at $8,800. The risk I took per trade was $800, and the overall profit accumulated to a remarkable $8,000. All of this occurred within just 3 working days. Additionally, gas stocks are following the expected wave analysis perfectly. We have observed 1, 2, 3, and 4 deep waves, and this is a preferred correction pattern for traders. During this deep correction, traders either start buying aggressively or opt to buy on the breakout, and then we anticipate taking advantage of the fifth wave, which is currently being realized. Therefore, I am very satisfied with my position in gas. I secured my profit at this stage because I couldn't capitalize on the third wave. We patiently waited for the correction, and now we look forward to making money on the fifth wave, everyone. The market will undoubtedly reward us for our patience, as we have waited so long for this much anticipated correction, 2 weeks in total. Then in just 3 short days we experienced a strong impulse, during which I chose to stay actively engaged in the market. So congratulations to everyone involved. We will soon finalize the gas agreement. Certainly. Here's an expanded version of your original text. So guys, we have a variety of other trading instruments available for you. Gold, oil, silver, the Canadian dollar, and the New Zealand dollar. All these instruments can be accessed today through our exclusive closed channel. Be sure to subscribe to my private Telegram channel, where I share daily analytical insights, allowing you to trade effectively today. There are some excellent entry points for gold, and we began trading silver just yesterday. Additionally, you can incorporate other currency pairs into your trading strategy, and there are promising entry points for oil as well. All of this valuable information and more can be found in the closed channel. This version maintains the original message while providing more context and detail. I will now show you a brief glimpse of the trading activities. The remaining details will be shared in the private closed channel.